That should come up at some point of time. Aman Chowhan, fund manager at Abakkus Asset Manager, joins us on the show. Hi, Aman. Good afternoon. Good to see you in. How are you feeling about the markets? Well, some of the investors are getting a little bit, worried. Last 1 year, no returns. Many stocks down 10, 20, 30% odd. Good time to buy?
I think the reason behind last year no return and the correction that we have seen in the recent months has been the global uncertainty. That has not changed as such. So I'm not sure whether this is the right time to buy or no. Markets can drift lower if this uncertainty stays because then monthly export numbers are getting impacted for various sectors, right? And that's not something that is what market is going to like. So while domestically things are getting better, mostly the festive demand, this festive season this year will be much better than what it was in the previous years. But till the time the global uncertainty doesn't go away, I don't think markets are going to rush in a hurry.
Okay, Aman, you took the bails off there. I thought you were going to say, yes, it's a good time to buy. But as you're highlighting, the globe is still in a bit of a flux. And that's why, you'll have to watch out on that front. But since domestic themes are something that come to mind, and there are a lot of measures being taken on ground, monetary, fiscal measures as well. And some of these quarterly, monthly updates are not looking too bad. So the street will take heart from that fact and hope that second half of the year we see that earnings recovery. Give us a couple of themes that you like.
So that's true. Second half is definitely going to be better, and not just versus the first half, even versus the last year. So clearly, discretionary consumption is something that is going to do well. We expect demand also to pick up because of various capex as well as the government infra spending, which is back on track. So that should also tend to do well. So that two segments are doing well. We are also pretty positive on metals, though it's not just local demand globally because the dollar is weak. The way precious metals are moving, we are feeling that the rub effect of that will be on other base metals also. That could also be a good theme to look at. So broadly, this is what we are looking at. Besides that, financials continue to be something that we are positive on. 2Q might be the last quarter where we'll see margin pressure. From 3Q onwards, the NIM compression or the margin pressure will start to wane off. And with the second half growth picking up, even the credit demand should pick up. So that's broadly the theme that we are looking at the current juncture.
Aman, do you like anything and broadly the space, right? Apparels, and that's an export story though. Look at something like a Gokuldas, 1250 to 700, completely smashed. I'm just using that as an example. And of course, it's been on the back of these tariffs, and we were supposed to greatly benefit by lower tariffs. It's worked out the exact opposite way. How does one work through some of this in this space? I mean, if you like or you have a view from a longer term perspective.
Yeah. So clearly, textile is one of the worst hit sectors because of the tariff. And the earlier assumption was India's tariff will be relatively better than the peer group, say that Philippines, Taiwan, Bangladesh, Pakistan, the other competing nations on the textile front. But as things stand today, things have reversed. We are not expecting this 50% tariffs to stay for long, that is for sure. But then whatever the number is, market is sensing that number could be similar or maybe even higher than the peer group. And if that happens, then India loses the competitive advantage. And maybe that is a bit reflecting in the way INR has also depreciated in the recent months. So keeping that in mind, I don't think anybody will be in a hurry to get into this sector per se till there's complete clarity as to what the tariffs are going to be. And if it is a competitive tariff, then maybe some of the lost ground will be regained. Otherwise, stocks can languish for long because US is by far the largest market, and not just largest, the most profitable market for these players. And if things there are not looking clear, I don't think investors will be in any hurry to get into these names.
Aman, hi. Great to have you on this afternoon. Season's greetings, festive greetings to you and your team and to all at home. Now, since we're talking GST and consumption, I wanted to get your sense on autos. The kind of improvement that we're seeing in the sales numbers, very heartening. I mean, at least the September data. The question is this sustainable? Is this the start of a bigger uptrend, particularly in, say, passenger vehicles or even commercial vehicles for that matter? What's your sense? Do you like anything here, auto or the entire chain, maybe auto components? How are you thinking about it?
So clearly, 10% is a large cut that has come in, and there has been a lot of push-up demand as well as staggered demand that has come in from the auto space. So for the next few months, numbers are going to be much better than what we initially thought pre-GST. Post which I think the demand should taper back to the normal thing. Last few years, demand has been very soft, low single digit. we expect that to pick up, maybe to a high single-digit kind of thing. So from that perspective, yes, the sector is looking good. It's overall the feel-good factor, right? It's not just the GST cut. So that is the trigger. But if the economy has to do well, then this consumption discretionary segment should also do well, and autos definitely would benefit out of that.
All right. Aman, short a chat today and a bunch of more questions. Thanks very much for joining us. Have a good holiday tomorrow and festive greetings to you and your team and your family. I really appreciate you coming on, as always. Now, a bunch of